Welcome to a new episode of Crypto with Coffee Spotlight, the series that puts under magnifying glass hot topics, companies, and stories from the crypto ecosystem relevant from a risk management perspective, and of course for the Crypto Risk Office community. Today we are talking about Web3 crypto job market with Connway Hunter, founder of CJR Staffing, but also talent advisor and community builder for the Crypto Risk Office. I'm so happy to welcome Connway today. Hi, Connway. How are you?
Hi, I'm very well, thank you. How are you?
I'm fine.
Very happy to be here.
I'm also happy to have this chat with you. It's been a while that we discussed about having a podcast, an interview together to talk about the job market in Web3 space. And here we are today.
Absolutely. Well, it's a pleasure to be here, and thank you for asking me. I think it's something. The staffing and job market is so sort of directly correlated to how healthy the sector is, and I think it's something that should definitely have more of a spotlight on it. I think more people should be definitely talking about it. So yeah, really happy to be here and share some insights that I hope everyone finds useful.
I'm sure you will. Thank you very much again, Connway. And let's start. I would say, why don't you introduce yourself for all our followers?
Yeah, perfect. Yeah, absolutely. So yeah, Connway Hunter. I've been working in the staffing industry now for just under a decade, working across developed and emerging markets. So, working across the APAC market, sort of 5-6 years in the Middle East market, and more recently working across sort of the US and European markets, with the last probably 3 years of that being in the crypto, DeFi, digital asset space.
Amazing. Great. So with the extensive experience you have, how would you feel describing the current job market in the crypto industry and the Web3 space?
It's such a great question, and I think it kind of has to be answered in multiple layers, to be quite honest with you, because I think the health of the job market right now is massively dependent on where you're located. I think that for obvious reasons, we know that the US market is not holding as strong right now in terms of hiring within the crypto, DeFi, digital asset space. Purely because, what I think a lot of people in the sector would describe as a regulatory overstep, but we're still obviously to see the outcome of that. So, if we talk about it very briefly from a US perspective, I think, unfortunately, due to the regulatory environment in the US, it's causing a lot of firms to pause fundraising, which is never a good thing for the sector. We're in dire need of liquidity. We're also in need of venture capital and private equity capital to ensure operating costs are met, to ensure that hiring can be met and people are actually in the business that can deliver the growth that's required. So I think from a US perspective, liquidity is on the low side, and also venture capital, private equity funding is definitely not being deployed in the volumes that we've seen it deployed previously. Which is kind of, if I was to sum it up, I think a lot of firms in the US are almost being forced to really just sit on their hands right now. They're having to sit on their hands. They know that they have positions that need filled, but, in terms of the risk involved of making these hires, it's never been higher if you're a firm in the US. Pulling the trigger on a expensive C-suite hire, product hire, or business development hire is very, very risky right now in the US market based on the current market sentiment. So I'd say in terms of from a global perspective, that the US is most certainly lagging behind other locations where the regulators are, what we would describe as more crypto friendly, more sector friendly to what it is that all of these types of firms are trying to build. So I think, it's tough in the US right now. Not because firms don't want to hire. There is an appetite to hire. All of the firms that I speak to, if I speak to, market makers, if I speak to staking firms, if I speak to exchanges, there is most certainly an appetite to hire. But unfortunately, at the moment, it just doesn't make business sense to pull the trigger on those hires based on the current regulatory environment.
Of course.
Then if we move over into the European markets and the London markets, if you take, for example, the crypto-friendly approach that the current UK government is taking, with many larger US names taking meetings with the FCA, with the Bank of England. One of the most prominent names being Gemini recently. Here in the UK, taking meetings with regulators, etc., potentially looking for a new home outside of the US. Now, what that does is it lends itself a huge amount of credibility to the European and UK markets when you have such prominent names exploring potential new homes, and the likes of London and the UK being thrown in the mix for that lends a hell of a lot of credibility to the UK sector. Now, in terms of jobs right now, the UK has been extremely intelligent and essentially of taking advantage of what's going on in the US. What we're seeing at the moment, and what my firm is seeing specifically, is with all of the regulatory with the regulatory environment in the US as it is, there's a lot of firms that are looking to hire in the UK purely based on the time difference not being too horrendous between the US market coverage and the UK time zone. So we're seeing a lot of firms looking at hiring quants, traders, research type individuals that can cover the US markets relatively easily. So we're seeing more of an increase in terms of firms looking for traders that they can have outside of the US jurisdiction, so that there's no conflict and they're able to really sort of trade with freedom and generate some serious returns, whether that be proprietary capital or whether that be investor capital that they're trading. We're seeing a very, very big increase in the requirement for traders and quant traders in the UK markets for sure, because the UK is also quite a strategic market in terms of coverage. You can have a trader based in London that can cover, if they start early enough in the day, they can cover the Asia markets. During the day, they can cover the Middle East markets with that time difference. And then at the tail end of the day, they can cover the US market with that time difference. So it's a very, very good strategic location. And that's certainly what we're seeing an increase in right now, is mainly US firms looking to hire staff in the UK so they can still get the market coverage. But more sort of job vacancies coming through for traders, DeFi quants is where we're seeing the volume come through there for sure.
I see. How about the rest of the world? Middle East, APAC. What do you think about this?
Absolutely. So from a Middle East perspective, I think it's really, really important to highlight just how crypto friendly and DeFi friendly the Middle East market is becoming. You just have to look at some of our colleagues and some of our network that is in the Middle East and firms that are opening up there that are doing a fantastic job of really sort of building the sector and building the ecosystem out there. And Crypto Risk Office is certainly aiming to be a key element and key ecosystem builder of that. I think the most positive thing we are seeing is the flow of investor money actually leaving and going into the startup realm. I think that's, if you compare the the investment taking place in the Middle East compared to that of the US, it's like night and day. And also I see that a lot of firms where the Middle East and APAC markets are tied in together, is they're almost seen as a gateway for each other into each geography, if that makes sense. So the Middle East is seen by Asia as a gateway into the West, and then from a Middle East perspective, the West, the Middle East is seen as a gateway into the Asia markets. I think Vara are doing an excellent job right now in regards to the information that they're releasing. I think it's incredibly important, especially for a new regulator. They have to be visible. They have to be releasing information that's incredibly important to the sector. And I think that Vara are doing an absolutely fantastic job of doing so. Then in turn, what that does to the job market, it's fantastic. And what that does to the job market is it gives much more confidence to hiring managers and to firms to hire people. I think if we were to talk about what are we seeing in the Middle East market, and we'll come on to APAC after, it's a very, very big focus around the risk and compliance function. I think that, as someone who's experienced the Middle East market for 5 years, I think we could be forgiven for saying that, compliance was, up until fairly recently, it was seen as a back office function. It was something that was very reactive rather than proactive. And I think that if there's one thing we can take away from the last 18 months in the crypto DeFi space, is reactive risk and compliance is just not going to work. You're going to get fined. You're going to get disciplined by regulators. And I think that's one thing that Dubai, more from a TradFi perspective, they do hold people accountable. There has been things that have happened in the past from a regulatory perspective in the Dubai market where the regulator has come in and almost made an example of what not to do. They've really, really punished firms that have taken advantage of the market out there. So I think that's also an excellent thing, if you have a firm but fair regulator. And what that does to the job market, as I mentioned, it means that capital is flowing, which means that hiring is taking place. In the Middle East, it's risk and compliance focused. So people that can build robust risk frameworks and also compliance frameworks, whether that be from a AML, KYC perspective. I think that the Middle East has to combat almost its geographical location a little bit, because it's so close to what would be considered hot money in the industry. So I think it's even more important that those risk and compliance frameworks are built very, very robustly, and almost built from a TradFi perspective in terms of just how robust they are, and then obviously being more reactive in the space. And that's something that I think is a tough thing for hiring, because compliance in the Middle East has been allowed to be very tick box, very quite generic, almost as a back office function. C-suite are now having to hire a new caliber of risk and compliance individual, whereas before, let's say 2 years ago, crypto firm or an exchange in the Middle East, you could quite easily just take a compliance officer or chief compliance officer out of a TradFi bank, right? And they would have been more than able to get the job done. Whereas now we're looking at people that have got a TradFi training background, that have spent time in the DeFi space, because they understand how proactive you need to be from a risk and compliance perspective. I mean, right now, you're a chief compliance officer in the Middle East, running a compliance function in the DeFi space. You've got a lot on your plate. You've got a lot on your plate. You've got a lot going on. You've got a lot to stay ahead of. And you've also got a lot to keep on top of, as it's just such a fast-moving, ever-changing environment in the Middle East. So for me, the hotspot in the Middle East is risk and compliance. And of course, look, I think the running theme between all of the markets that CJR operate in is there's always going to be a requirement for revenue-generating individuals. Okay, so whether that's traders, whether that's BD, salespeople, if you've got what we call like a nice sort of Rolodex or a nice black book of contacts that you can generate generate revenue from, you're always going to be in demand. So that is still something that is very much taking place in the Middle East, is from a revenue generating perspective and job title perspective. But that's like a running theme throughout all of the markets. But right now in the Middle East, we're seeing really, really sort of good movement and good traction in the risk and compliance space. Vacancies are definitely on the up there. And we're also seeing in the Middle East that they will relocate people from outside of the region. It's a very, I think Dubai did an incredible job, or the UAE, I should say, did an incredible job post-COVID, being one of the first countries to really, really open up. Now, saying that, we had a really, really tough lockdown, right? We had a very intense lockdown, but that definitely then allowed the UAE to come out ahead of, I think, all of its major competitors in terms of financial centers. So one of the things that Dubai really, really has on its side is the fact that people want to be there. People want to relocate there. They want to relocate. There's still no income tax. Okay, so that's a huge thing for a lot of overseas talent. And then, of course, the lifestyle and the weather. is something that people are always interested in, and almost the opportunity to operate in a financial center of the future with all the new regulators that are coming in, new regulations that are coming in, more crypto-friendly mindset. It's an opportunity to come and work somewhere and really build something for the future. And that's something that I think the Middle East has done incredibly well. And then if we move on to the APAC markets and the Asia markets, to touch on them quite briefly, I think worldwide, Hong Kong and Singapore, I believe, are renowned for being the most sector-friendly, crypto-friendly regulators. And then on that, what we are seeing specifically, because they've fostered an environment of innovation, because they've created really good regulation that allows startups to innovate, and it's night and day from the US. The US has created a very strangled down regulatory environment, which means people are scared to innovate. People are scared to try new things. Whereas in Hong Kong and Singapore, you're not going to be reprimanded. You're not going to get in trouble for trying something and it might not work. They've really fostered a really good culture of innovation within the sector. So they, in my opinion, are world renowned for being the most sort of crypto friendly regulators. And what that's seen an increase in is product positions and product roles, because they've allowed this culture and environment of innovation to happen. They're allowed to play around a little bit, right? They're allowed to sort of look at, okay, well, what can we create that is an innovative new product or and innovate within our sector, which has then led to a lot of technical product people. So you've always got what I see as sort of the front end facing product people, and then you've also got the technical product people as well within the organization that understand the front end of the product, but also understand the tech that goes in behind that as well. And they can operate as a real business partner within the organization, because sometimes the front end product people, they're kind of up in the sky in terms of what they want to create, when sometimes if you're in a startup, your tech stack doesn't quite support what you want to create. So we've seen a real increase in terms of technical product managers that understand the full life cycle of the product, that can look at it from a front end facing way and then take it all the way through the business, and then back end speaking to the tech guys in their language, the tech people in their language, and saying, can we actually do this? Does our tech stack allow us to create that product where it's actually going to work? We don't want to be creating products that kind of half work. We don't want to be, for want of a better word, half-assing anything. We want to be creating something that actually works on the front end as well. So that's a bit of a, as I mentioned, it's maybe a little bit of a long-winded answer, but I think it's important to really sort of dissect. I was what the health is based on where it is.
Yeah, between Hong Kong and Singapore, we know there is always a bit of healthy competition there, Hong Kong, Singapore. And it seems like at some point Hong Kong have fallen a bit behind, but then with BUS now, it seems like pretty much in the game. And where do you see company looking at in terms of city for cover APAC? Are they looking more into Singapore or Hong Kong at the moment?
It really is a split. It really is a split. I think that the challenge that the APAC market is going to face is, unlike 5, 6, 7 years ago, it's actually quite a tough sell to the talent market. And that's because they've got a massive push on nationalizing quite a lot of positions, especially if you're a fully regulated financial services entity. So they've nationalized quite a lot of positions where maybe 6, 7, 8 years ago, you would have an expat doing the role, chief compliance officer, chief risk officer, etc. They are very much pushing for certain roles to be nationalized. And that, alongside the very much rising cost of living, it's actually quite a tough sell right now to get someone out of Dubai, to get someone out of London to then go over to the APAC markets. So I'd say it's a very even split. I think that what we are definitely seeing more of is, I think right now, and it's more just in regards to timing, but ever since Hong Kong recently announced it was fully back open for business, the mask mandates were gone, flights were opening up in and out. I'm definitely seeing a little bit more of an increase towards Hong Kong. And that's also because you do also have major TradFi players in Hong Kong, such as Fidelity International, that have obviously just recently filed for their Bitcoin ETF, which is really, really kind of slightly pushing it ahead. But I think, you know, to answer the question in the most straightforward manner, they're always kind of going tit for tat with each other. Is the honest answer. They're always going tit for tat. Sort of one creeps ahead. Yeah, one creeps ahead, then the other one creeps ahead, then there's an announcement for something, a new sandbox that's being created, or a new white paper that's been released from a regulator, and they kind of go very much back and forth. But, you know, I think it's incredibly important to be licensed in these jurisdictions, whether it's Hong Kong or Singapore. I think my advice would be to firms that are looking at incorporating outside of the US, you know, if it's an exchange or if it's a fund, really just knuckling down on where's your actual capital coming from, right? Would then dictate to me where I would incorporate and where I would get myself licensed. And also having that conversation with your clients, right?
Yeah.
Like, ask them, where would you prefer? Like, we're going to be setting up outside the US. What would your preference be on where we're based? I think having that conversation with your clients, if you are looking at leaving the US markets, is incredibly important. Understanding where your capital is flowing from, and then also having that conversation with your clients. Look, we're looking at Singapore, Hong Kong, Dubai. What do you think? Like, what's your opinion? Where would you like us to set up? Because obviously, there's capital at risk, right? You want to be somewhere that has the most robust framework to protect your capital, and that's something that institutional investors will be looking at more so now than ever.
So Connway, wow, that was amazing. Thank you very much for this fantastic overview across the world. You covered a lot, but now I feel like let's dig into a bit more specific question.
Sure.
So my first one is, what specific skills or qualification are in high demand among employers in the crypto and Web3 sectors?
Perfect. So again, I think right now it's very much dependent on location. So I can run through those for you as well and just sort of chat you through exactly what's in demand. Right now, the overwhelming thing for us right now as a firm is people that are able to take advantage of the market volatility. All right. So crypto and DeFi is still it's a new asset class. All right. And because it's a new asset class, what that creates is it creates inefficiencies, and it also creates volatility, especially with what's going on in the US right now, the regulatory environment, etc. So what you have is, if you have, it's not inefficient, but there is inefficiencies that can be taken advantage of to generate income. And then there's also that. So you've got the inefficient, and then you've also just got the key thing that we're seeing is really traders that can take advantage of that market volatility. So it's DeFi traders. But, you know, where if you were in a TradFi, if you're looking at this from a TradFi perspective, you'd think to yourself, okay, we want to go with we want to hire like a global macro trader.
Sorry, Connway, give me 1 second. I will
sure.
I don't know if you can hear this in the background, this noise.
Oh, a little bit. It's okay though. It's not too loud.
Yeah. Okay. So, well, I will cut this one. Don't worry.
No problem. That's fine. So what we are seeing is a real increase in people looking for DeFi traders. Now, where the difference comes in, because it's still a relatively new asset class, the real key is DeFi traders that have multiple strategies. If you were hiring in a TradFi organization right now, you'd be thinking to yourself, okay, we probably need to go down the arbitrage route, because there's some really sexy opportunities in arbitrage right now with the market volatility. But with DeFi, and something that investors really, really want within the DeFi space, you know, if you're a fund and you're speaking to an investor, the first thing that investor is going to ask is, well, who's your head trader? And what are their strategies, and what are their background? And it's the multi-strategy approach that investors are really, really wanting to see right now. They don't want to with them kind of dipping their toe in the water with a new asset class. Family offices are interested, institutions are interested. There is still an interest in DeFi here, regardless of the current market situation. They want to see a multi-strategy approach. They do not want to give a $50 million check for it to be all put into the one strategy. So now, we're seeing a real increase for DeFi traders with a multi-strategy approach is the overwhelming answer. I'm looking for those people in APAC, Middle East, Europe, and the US, and even in South America and Mexico, for example. So every single geography that CJR operate in, it's DeFi traders with a multi-strategy approach is very, very much in demand right now.
So these are basically the roles and job functions that are experiencing a rapid growth at the moment.
Absolutely. And alongside that is, again, when I mentioned investors and what they want to see, a multi-strategy approach, risk and compliance is in these other markets. So APAC, European markets, and also even in the US as well. The investors are asking, let me see your compliance framework. Let me see your risk framework. Let me sort of take a deep dive into how protected my money is. Let me see your risk. Let me see your controls. And that's something that we're definitely seeing an increase in, is where, before, if you were the CEO or CIO or head of IR, they'd be speaking to an investor. Now, the chief of compliance and the chief risk officer are in those meetings. And that's something that it has happened before, but it's becoming a lot more prominent for those job titles to be sitting in with these investors right now and basically selling what they're doing from a risk and compliance perspective to make sure that that capital is protected and being deployed in the most efficient ways possible. And that is something that is paramount and will be paramount moving forward. So across all geographies right now, we're looking for responsive, proactive chief compliance, chief risk officers to move into the DeFi space as a first time mover from TradFi, or people that have got a couple of years, 3-4 years under their belt working in the DeFi space. And I think that's for me, that's the most welcomed change, as well as I've always been a big believer. When I speak with some of our colleagues at Crypto Risk Office and people in our community, I've always been a big believer in your risk and compliance framework actually being able to really set you apart from your competition. And it's really, really refreshing to see, these chief risk officers, chief compliance officers coming into investor meetings and saying, listen, this is why we're the best. That it's not just because we've got great traders, great strategies, great execution. We're also solid on the back end. We're also solid on the risk and compliance framework. And that's, for me, the most refreshing and welcome change that I have seen as well.
That's amazing. So my last question is, like you mentioned, new people maybe bridging from TradFi into DeFi. So how important is it for job seekers to have a solid understanding of blockchain technology and decentralized finance when applying for roles in the crypto sector? Yes, can you clarify about that?
Yeah, it's an excellent question, and it's something that would have been much more straightforward to answer 3-4 years ago. I think 3-4 years ago, 4 or 5 years ago, when Bitcoin was climbing and the prices of everything were going through the roof, etc. I think we were a lot more accepting as a sector of almost taking people at face value. I hate using the phrase, but we were a lot more accepting of the crypto bros, and etc. And I think that now it's something that we just won't stand for as a sector. So it's never been harder for someone to come from TradFi into DeFi than it is right now. And the reason being for that is I believe that you can only really have a unique understanding of what this asset class is actually like if you've worked in it. Now, listen, if you're fantastic, I think the closest asset class, in my opinion, is FX. If you're a solid FX professional, whether that's sales, risk, compliance, trading, I think you can very, very quickly get a grasp of DeFi and crypto. Absolutely, no doubt about it. However, right now, if I was to be absolutely honest with you, every single one of our clients right now is telling us they must have DeFi experience. They must come from DeFi. They must come from a native, or they must come from a TradFi digital asset arm. Is basically what we are being asked for. I'd say, if I look at my board next to me right now, every single role must have DeFi, must have DeFi. How can you combat that as a candidate looking to make the move? Would be offering up, and something that is very much overlooked in the process of applying for new roles, is actually just very, very freely offering up referees and references on the work that you have completed, and also have referenceable information on what it is you've actually done. Like, what have you completed? Having a stack of undeniable proof and people that can be asked about that work will be absolutely key to making the move into DeFi right now. And having people, those references able to explain how quickly you're able to move, quickly you're able to pivot, your thirst and ability to learn, because it's changed. You and I know more than anything, the conversations we've had over the last few weeks, it's changing weekly. It's literally changing weekly. If it's not positive news about BlackRock and Fidelity filing for an ETF, it's negative news about someone being fined or being sanctioned or being stopped operations in a new emerging market. It's so ever changing right now that I think it's incredibly important to demonstrate very, very clearly, very concisely what you've done in TradFi, how that could be transferred into DeFi, and then having people that can give you a positive reference to the work that you've done and how that could transfer over to DeFi would be my advice for making that move. And also, if you are, this is easier done more so on the trading and revenue generating side. But if you're a BD person within DeFi, ask a client to give you a reference. Ask one of your clients to chat to someone that you might be looking at going to in terms of a new job. And from a trader perspective, if you're an FX trader and you are trading personally in DeFi, get your wallets verified. Offer to have your wallets verified. If you're a good trader and you're generating good alpha, good returns, just have your wallets verified by this potential new employer. If all your professional CV is showing is FX, but you can show good returns trading personally within DeFi, just get them to verify your wallets. That's a very straightforward thing to do, right? It's something, and it also shows. It's something that a lot of people don't think of. But if you're a trader and you're playing in DeFi personally, and that's the only thing you've got to reference and show, have them verify your wallets. Only if the returns are good, of course. If it's not, if it's not good, then don't do that. But that would be my advice. Absolutely.
Well, on these, I also wanted to ask you, for younger people that are looking at entry at some point the crypto space, Web3 space, but they have to go through their education, final stage of their education. Are there any specific educational backgrounds or degrees that employer prioritize when hiring for crypto and Web3 positions?
Again, a really, really good question. And I've got to be very, very honest here. It's not really something that employers and our clients have said they must have, XYZ from XYZ school, it's not. I think it's more prominent on like the quant side of hiring. They want people from, MIT or the best schools with mathematics, computer science degrees. But I'd say for most other positions, as long as you're, I think, degree educated, I don't really believe that there's anything specific that would get you to come out ahead. And the reason I'm saying that is because the sector has moved on, so much that if you got, a degree now, with where DeFi is going, not that it would be obsolete or not valid, but it's going to have changed so much by the time you get to like year 5 in DeFi, right? So I think the most important thing or the most important advice I would give, and also my clients would give, is get into it as quickly as possible, whether that means taking an internship, whether that means taking a placement. It's being in the environment and understanding the environment of DeFi is so important than the educational. There has to be an educational foundation, otherwise you just won't get DeFi. You just won't understand it. But being in the environment, being in an organization that is within the DeFi space. And that can be anything. That could be a market maker, that could be a staking firm, that could be a trading firm, it could be a hedge fund that's doing DeFi. Like just getting into the environment where, you know, their finger is on the pulse all the time on what's going on, and just understanding how these organizations operate is the most important factor. I would, you know, listen, I would take, if you were to say to me, Conway, like you're hiring a head of business development role, okay, and one person had a business degree out of Harvard and the other person had a business degree out of a different university in the US, but the second person had 5 years in DeFi versus 3 years in DeFi. If that was the only thing differentiating them, you're going for the person with 5 years in DeFi.
Yeah.
You're going with people that are more seasoned and more understanding of how the asset class operates, rather than someone that's got, you know, a fancier school or fancier degree but less experience. Now that's quite a general comment that I've made there. It certainly is. I can understand why some people would disagree with that. But that would be my advice. Is just for younger people looking at getting into crypto and DeFi. It's just getting in. And the one thing that you can take advantage of, and the one thing that is so fantastic about this asset class and sector, it's very, very collaborative, right? It's DeFi, TradFi, sorry, everyone keeps the kind of cards close to the chest, don't really want to know what you're doing, don't really want to talk strategy, don't really want to talk shop. Whereas I found that in the DeFi space, it's so much more collaborative. And also, the geographical spread for DeFi is still very, very small. You know this just as much as I do. All of the guys and all of the crypto DeFi people in Hong Kong knows everyone in Dubai. Everyone in Dubai knows everyone in Switzerland. Everyone in Switzerland knows everyone in the US. It's a very, very, very collaborative environment. So take advantage of that. Network as much as possible.
Small, relatively small, isn't it?
Absolutely. So take advantage of that. Get introductions. Network like mad. I mean, there is so many crypto drinks, crypto nights in London, for example. You and Crypto Risk Office have already held a couple out in Dubai. There's loads out in APAC. You know, get on. You know, just type in DeFi events, crypto events, get out in front of people, you know, show that you've got a hunger for it, show that you've got a thirst to gain knowledge in it, and network like mad. Because more often than not, you know, even in the staffing industry, it's who you know. It's what is your one of my sort of greatest mentors within recruitment and staffing always said, it's about your connectivity layer. What is your connectivity layer to the market that you're operating in? And you need to have it multifaceted. You need to know who the C-suite players are in case you might meet them. It's important to be impressive, but you also need to meet those middle managers that are also likely to hire you. You know, like you might want to meet the chief compliance officer, but if you can only meet the compliance manager at drinks in London, then take full advantage of it. So network like crazy. It's a very collaborative environment. People want to chat to you. People want to share their knowledge.
Yeah. Now, great advice. Thank you very much, Conway. I do have another question. I think you partially cover it, but maybe we can dig into it a little bit more. How does risk management in the crypto industry differ from the traditional risk management practices, and what unique challenges do risk management professionals face in this space?
Just how quickly it moves is the number one answer for me. You know, it moves at a much faster pace in DeFi, and keeping on top of that is incredibly difficult, because I think what people see in the press and in LinkedIn articles and stuff like that, they go, oh, there's a regulation change, or there's a new standard that's been released. If you compare it to TradFi, the changes, because TradFi's been around for so long, if there is a change in regulation, if there is a change in standard, it's not going to be a huge change. It's not going to, it's less likely to be something that would revolutionize TradFi. And they've got 100+ years of these types of changes. Therefore, they're built, they're enabled. They've already got the docs and the policies and everything internally that they can reference and change. That doesn't exist in DeFi. Any change or any risk and compliance regulatory change right now could have the potential and ability to completely revolutionize the crypto space. Like, for example, people like me as a personal investor, I'm sitting here with my fingers crossed that BlackRock or Fidelity gets approval. I really, really am, and I don't think I'm the only one.
Many like you, don't worry.
Yeah, that would completely, that is a revolutionary move for the sector. Yeah. If one of these big TradFi guys comes in, if Mr. Fink comes in and says, this is digital gold, things like that can literally move the market, right? And all you need to do is look at the price of Bitcoin prior to Larry Fink saying anything positive about Bitcoin. Then when he says something positive, the price does tick. It does move up. He's definitely a market mover. So it's the pace of change in DeFi that I think separates TradFi and DeFi from a risk and compliance perspective. Yeah. Having the ability to stay on top of it all of the time. But also another key difference in DeFi, because kind of everyone's, not all regulators, but some regulators are kind of out to get DeFi and almost are waiting for it to slip up again. You get less time to respond. Right, there's been a certain business in the Middle East that was put into our community recently that's been sort of told to cease operations, or they'll be allowed to continue operations for 60 to 90 days. That is such a short amount of time to completely, almost potentially completely change and redo your risk and compliance framework. That is such a short amount of time. Whereas in TradFi, you'll get hit with a big fine, and then you'll be given 6-12 months to rectify and to change. So first and foremost, it's the pace that everything is changing at and keeping on top of that. But also the time that you're given to respond in DeFi is a lot less. So that would be the two key things. And then also what I mentioned earlier is you have to be more proactive in DeFi. I think in TradFi, because it's obviously so established and such a you so many institutions in TradFi, you can afford to be a little bit reactive, and we see that all the time. Like the TradFi institutions are getting fined left, right, and center all the time for stuff that doesn't even hit the news or hit the press, right? Whereas in DeFi, you're scapegoated, you're made an example of because it's DeFi, because everyone's kind of waiting for it to slip up. So to summarize that, it's the pace that everything changes, and then how much time you're given to rectify and remedy those changes are huge.
Yeah, well, you are absolutely right, and great advice. And I hope this will be seen by many risk management professionals. So just to have a few more insights from an expert like yourself. So let me just share for people. We're kind of running out of time. I'll just share with everyone is watching, in case you want to get in touch with Connway, have a question, or looking for a job, or looking for someone in the space. This is your LinkedIn. So it's linkedin.com recruiting made simple. Wonderful. I like it.
Thank you very much. Thank you.
Connway, it was such an amazing conversation today. It was really a pleasure for me to have you here with us. And
me too.
Lots of takeaways, very insightful discussion. And I'm sure we'll have an update soon, because as you said, things change all the time, the DeFi space.
Absolutely.
So I believe also the job market keep changing, and there are always new updates. And we'll have a catch up soon again.
Absolutely. It was a pleasure. Thank you so much for your time.
Thank you. Thank you very much, Conway, and to all the people that follow us. See you at the next Spotlight interview.
Thanks.
Bye.
Bye-bye.